Let's look at the live trade results on Friday, July 9th. The market just closed, and I will walk you through the positions and how the P&L looks for the week. We are very transparent with you and want to show our live trading terminal be it a loss or a gain. To start with, we emphasize on portfolio diversification, strategy diversification, and market uncorrelation. The first category is portfolio diversification, where we try to maximize our returns using different underlyings. So to start with, we have 0 DTE trades primarily on the SPX and the NDX, which is the S&P 500 index and the NASDAQ index. As you would know, 0 DTE is our favorite strategy, and you can see the SPX trade is in the green for $1,190 and NDX is in the green with a gain of $335. 0 DTE is our favorite strategy due to the fact that it has the fastest theta decay among all the strategies we have discussed. The second category is underlying diversification. We also trade neutral strategies on strong fundamental underlyings such as Amazon, Palantir, Tesla, Etsy, and Dash. As you can see here, they have also worked very nicely for us. What is a neutral strategy? A neutral strategy is something that just takes advantage of the time decay inherent in options pricing. As you guys know, options are priced based on the time until expiration, and as long as the underlying does not make a significant move in either direction, we can calculate the amount of theta time decay that happens per day and use that as a strategic advantage. Again, the only condition is it does not make a significant move. If it does make a significant move, then we are very punctual to make adjustments as needed to bring our delta close to zero while adjusting positions. You can see here that significant theta is happening on the SPX, the NDX, as well as other solid underlyings such as Amazon, Peloton. Basically, every single ticker that you see on the screen takes advantage of time decay. So lastly, we have strategy diversification. We have several strategies that we have just deployed. The first one, there's a neutral strategy. The iron condor on the index is SPX and NDX. The second strategy that we have used is the call credit spread. The next strategy, conversely, is the put credit spread. We have iron flies, which have the fastest theta but also have the highest risk to reward. The next strategy we want to discuss is called the bearish covered put, which we see here deployed on GME. This strategy involves buying a long-term put and selling short-term puts against your long put. So you're essentially short GME, but at the same time you sell short put against it to collect gains since time decay is much faster on the smaller time frames. Use that to our advantage on GME due to the increased volatility. Now on to our uncorrelated trades, which is on symbols that are completely independent of the stock market. This includes agricultural products such as corn, seen as ZC, 6E, which is a euro, and CL, which is crude oil here. All of them have nice great profit for the day. We had a quick run through of our portfolio, which is diversified in terms of underlying, in terms of strategy, and in terms of correlation to the market. So if you guys want to understand how these trades are done and how we execute them so that we maximize advantage over the market, to take advantage of time decay inherent in selling options, and to have a portfolio that is neutral to market risk, makes money while time passes, and at the same time have adjustments when these trades go against you. We post alerts whenever the market goes against you to defend challenge positions as and when the market moves. I would like to run you through our Discord channel where we post the trades in real time, time-stamped. All our trades are filled at the market and I posted in real time, so given the high liquidity of the underlying that we trade, all our members are able to get almost identical sells to what you see right here. Based on your portfolio size, you can take the same number of lots or reduce the number of lots if you want to reduce the risk. As always, we are very keen on using strategic edge trading, and all our trades have a sound reasoning behind the logic of the trade and why we expect them to have a positive expectancy over time. So as you guys know, the only consistent way to make money in the stock market is by selling options premium. All other people who will promise you against using technical analysis using the fundamental analysis or even buying options could work only in the short term, but in the long term, selling options is the only consistent way to gain over the market long term. Every sane, informed investor uses the strategic advantage of options to make informed decisions that augment their portfolio.